Hello, this is Kevin McSweeney, Portfolio Manager with CI, to talk about the CI High Income Fund's performance for Q2 2021. A strong macroeconomic backdrop continued from the first quarter, which was great for stock markets, but did end up creating some inflation concerns, although bond yields generally fell despite this. Vaccine deployment across most major economies accelerated, allowing for economic reopenings, but COVID variants, such as the Delta variant, produced some concern late in the quarter about how sustainable or how strong the reopening would be. For the second quarter, though, the fund's performance was very strong on both an absolute basis and versus benchmark. Two of the fund's key asset classes, real estate and high dividend stocks, provided returns well in excess of broader market indices like the TSX or S&P 500. Our high allocation to real estate in the fund was particularly helpful for performance. While infrastructure had lower returns, the fund still saw price appreciation in energy infrastructure, and it was able to withstand headwinds in transportation and utilities. From this chart, you can see that pipelines and real estate indices have had particularly strong returns this year, validating our conviction calls in these sectors. On the fixed income side, high-yield bonds comfortably outperformed traditional fixed income, with their inherent advantage of higher coupons being supplemented by price appreciation from spread tightening. Within the fund, we also ran a higher than normal foreign exchange hedge level, which kept strong foreign returns high in Canadian dollar terms. On a go-forward basis, we continue to view the backdrop as supportive for equity markets given reopening, supported by high levels of savings being released into the economy and markets, as well as ongoing fiscal and monetary stimulus. The fund remains overweight equities over credit on relative valuation. We continue to see the fund's core asset classes providing an excellent solution for income-oriented investors, particularly as COVID impacted companies increased dividends from depressed levels. We're pleased that the strong historic performance of the fund has resulted in a very positive outcome for fund holders over the short and long term, and that was certainly on display in the second quarter of 21. I'm Kevin McSweeney of CI. Thank you for your time.